Traditional businesses work in a linear fashion. Raw materials come in, it gets processed in a factory, is turned into a finished product, is loaded onto trucks, reaches distributors, reaches customers, and the customer pays for the product. Now, business might add or remove a few things here and there, but the pipeline, the flow of work is pretty much unidirectional, whether we are talking about physical goods or services. And that's where a platform business is different. In its simplest form, a platform business model creates value by facilitating an exchange between producers and consumers. Now notice here I'm using plurals for producers and consumers, and that's because participants in a platform business more often than not also co-create and co-consume the offerings. Take YouTube as an example. The platform has millions of video content creators, and it also plays host to millions of content consumers who watch these videos. So what really is YouTube's role here? Well, firstly, YouTube has created the necessary infrastructure and it also maintains it. Secondly, YouTube processes and provides a lot of information to content creators and viewers in the form of likes, comments, analytics, views, etc. And thirdly, YouTube defines the rules of engagement, that is, the norms and guidelines that producers and consumers need to comply with. And it is within these three pivots that YouTube creates value for different stakeholders, which includes offering relevant ad spots for advertisers, monetization for creators, entertainment or education for the viewers, and of course, profits for the shareholders. So I hope this example shows how a platform framework is very distinct from a traditional structure, and to quote dramatic examples, we don't have to look beyond what an Airbnb, an Uber, a YouTube and Alibaba have done on this front. These businesses don't own any assets in the traditional sense and yet are major value creators, often surpassing their asset-heavy traditional peers. And so in this video, we shall examine 5 different platforms in the Indian context and what makes each of these businesses unique within their respective ecosystem. Let's begin. I have to say, anyone doing anything tech related these days seems to be building a platform. I mean, you can take any word and suffix the word platform to it, and it starts looking a bit cool and revolutionary. But just because a business is online and depends on technology does not make it a platform. In fact, one can strongly argue that Netflix is not a platform in spite of serving over 220 million consumers worldwide. And there is some merit to it. After all, Netflix, by producing its own and licensing content from other production studios, is to a large extent an online version of a traditional model. From an Indian context, a similar assertion can be levied on CDSL, that is, the Central Depository Services Limited, although I'm certain some investors might not agree with me, and that's fine because the very essence of what is a platform is subject to interpretation. Since we'll anyways revisit CDSL again in this video, let's span our attention to the 3 types of platforms that businesses operate within: an aggregation platform, a social platform, and a mobilization platform. The first type is the aggregation platform, which for all practical purposes is transaction focused in the sense that you have a need, you express that need, the platform generates a response, you do the deal, and then you move on. Now, aggregation platforms are a huge deal, and this can be further broken down into discovery platforms like the Google search engine, which connects the web page searcher with the web page creator, matching platforms like Naukri.com and Tinder, transaction platforms like Uber, Zomato, and Bazaar, and evaluation platforms like a TripAdvisor, which comes handy for reviews and recommendations. I think I mentioned 3 Indian platforms here: Naukri.com, Zomato, and Bazaar. So let's look at these 3 from a platform perspective and examine how these businesses are positioning and growing themselves. Of course, a quick note here, everything we'll discuss in this video, just like every other video of ours, is for educational purposes only and should not be construed as investment advice. If something clicks for you, then kindly do your own research and come to your own conclusions. Let's start with a platform which is into its 25th year and something that a number of us would have accessed at some point in our lives. Yes, we are referring here to Naukri.com, or might I say InfoEdge India Limited, which is Naukri.com's parent company. Now, Naukri is a classical flywheel, which is the hallmark of most successful platform businesses. More the number of people who post their CVs on the website, more is the number of companies who access the site. And as more companies use Naukri for recruitment, an increasingly higher number of job aspirants start flocking onto the site. Today, Naukri has over 8 crore resumes on file, and on any given day, Naukri has over 5 lakh job listings, almost 8 lakh resume searches, and about 16,000 new resumes are added on a daily basis. It's this proverbial snowball of candidates, companies, and more companies that continues to fuel this platform's growth. And more importantly, Naukri does this without needing to pump large sums of money in marketing to get incremental users. Now, pleasant consequence of this sustainable flywheel is the high amounts of free cash flow that InfoEdge generates, which it then employs to either incubate companies or acquire companies or take significant stakes in them. For instance, InfoEdge incubated 99acres.com in 2005, which is a property portal. It acquired IIM Jobs recently to boost its recruitment business, and the company holds a little over 15% of the shareholding in Zomato Media Limited and a little under 13% in eTech Aces Marketing and Consulting Limited, which is the parent company of PolicyBazaar.com. So to sum it up, InfoEdge is not just a convincing self-sustaining platform with heavy snowball effects, but it's also an investee in other businesses which it hopes will grow into becoming even bigger platforms. With that being said, let's look at our second platform. Now, on the face of it, Zomato's operating model is deliciously simple. It is a platform where restaurants and eateries list their products, and it's where consumers go looking for delivery and dine-in choices. In the middle of these two parties is Zomato, which offers everything a platform needs to offer: information, options, reviews, and more importantly, Zomato offers that delivery pipe which allows the producer's food to reach the consumer's plate in an efficient manner. Now, India's online food aggregation market is a duopoly, with Zomato and Swiggy being the last platform standing, which came after years of cash burns, discount wars, retrenchment, and acquisition. Since then, these platforms have consolidated their operations, and in numbers, Zomato has over 170,000 food delivery restaurants on its platform, fulfilling over 1.5 crore transacting users per month. But we think the story of Zomato is also a story of entrepreneurship. And no, I'm not talking about Dipinder Goyal and the co-founders of Zomato, but I'm referring to the tens of thousands of small restaurants, food stalls, and home cooks who can now access and deliver their products to a lot more customers. In fact, for a sizable part of those 170,000 restaurants, a Zomato or a Swiggy is a make or break, as the aggregation platform not only helps them with delivery but also makes these micro food hubs known to thousands of local users on its app. And yes, while there are complaints, and there will continue to be complaints about commission, delivery fees, promotional discounts, etc., there is no denying that food aggregation platforms like Zomato serve an important need, and these smaller players are likely to be tied to the platform for as long as they are in existence. A second interesting area for us to understand is growth. While the eating out and deliver at home trend is growing in India, we still lag behind Western and even some Asian countries. In fact, per the National Restaurant Association of India, the Chinese eat out 60 times a month. Wow. The Thai people do that 45 times a month, while Indonesians step out for food 15 times a month. In sharp contrast, we Indians eat only 2 to 4 times a month on an average. And it is in this context that Zomato continues to present a case for a 10 times growth in business and will serve as a major growth driver for this company over this decade. Additionally, there are some more promising enablers on this front, like a changing demographic profile with more nuclear families, changes in occupational profile with more women joining the workforce, greater spending power, and increased exposure to cuisines via food courts, the internet, food blogs, etc. Net, Zomato is a growing participant in a huge industry, with food services alone being pegged at 4.2 lakh crores and growing at 11% per annum. The next aggregation platform I'd like to discuss is PB Fintech, and by now this video might be looking like a dedication to Mr. Sanjeev Bhikchandani's unicorn identification skills. But PB Fintech, or Policy Bazaar as we generally know it, deserves a place in our list on being India's largest digital insurance marketplace with a 90% market share amongst online distributors. Now, between its two arms, that is Policy Bazaar and Paisa Bazaar, PB Fintech has made deep inroads in the insurance and lending space, with both businesses operating at an annual run rate of around 8,000 crores. From an operating model perspective, what really resonates, and especially on the insurance side, is this focus on creating value for both parties, that is the insurance company, and to also create value on the consumer side, that is the policyholder. This approach allows Policy Bazaar to cut through the value chain and establish itself as a necessary service for all stakeholders, which then helps solidify the growth and sustainability of the platform. Now, unlike a Naukri.com or Zomato, Policy Bazaar operates in a highly regulated sector like insurance and in the company of financial powerhouses like SBI, HDFC, ICICI and others. Now, I'd like all of us to focus on the regulation part for a minute here. You see, most companies, most stakeholders frown when they hear the word regulation, and especially when it comes to insurance regulation. While insurance companies and distributors have their silent complaints, the VCs and the investor community at large have been a little circumspect in putting their monies in this space. But in my opinion, if handled well, regulation can actually work to a company's advantage, and in that sense, it can give a lot of comfort and stability to its business model. Like in case of Policy Bazaar, the first comfort I get is that only licensed intermediaries like brokers and web aggregators can distribute insurance. This means the authorized suppliers of insurance are limited in number, and probably why Policy Bazaar has not been adequately challenged in the last 14 years, making it a monopoly with a huge market share in the online insurance distribution business. The second comfort that regulations provide comes from the fact that there are some insurances that an individual or a company compulsorily needs to have. For example, motor insurance is mandatory in India, which means there are lakhs of cars and two-wheelers that will need to get renewed every year. Likewise, in April of 2020, in response to the COVID-19 pandemic, the Ministry of Home Affairs issued a directive making it compulsory for all employers to provide medical insurance to their employees. And a third comfort around regulations is that it gives intermediaries like Policy Bazaar adequate visibility around revenue, with the regulator prescribing the commission that they can make on every policy they sell. This means if a policy is sold, the insurance company is bound by IRDA regulations and guidelines to pay the intermediary, which, believe me, can be a big relief for any business operation. So if you look at it this way, regulation need not impede the progress of a platform business, but can actually accelerate it. And now let's move beyond aggregation platforms and examine social platforms. All of us watching this video are users of social platforms. Facebook, Twitter, LinkedIn, Instagram, YouTube, WhatsApp are social networking apps we consume on a regular basis, and the underlying objective of these platforms is on aggregating and engaging people with common interests. Which in essence means that unlike aggregation platforms, which are more like a hub and spoke interaction, social platforms foster a network of relationships with the platform owner not involving oneself in that connection or community. This means social platforms have a life of their own, and over the years we've seen these communities evolve as user habits continue to change. For instance, we are now watching more videos, users want to consume content in stories, they're purchasing goods and services inspired by social content, etc. But in doing all that, there seems to be a shift happening from broad-based platforms to niche platforms. Now, Indian companies in this space are on the lower end, and my attempts at finding a listed Indian company came up with nothing. So if you know any Indian company in this space, then do let us know in the comments box below. So for now, we'll keep this discussion on social platforms aside And we will move on to the third and final category of platform businesses, which are the mobilization platforms. Mobilization platforms operate as the value adders in a transaction. In other words, these platforms mobilize people to work together to accomplish something beyond the capabilities of an individual participant. This character often makes these platforms a crucial and essential part of the value chain, and a typical example of that are supply networks or distribution operations. Let's start by first examining the company IEX, or the Indian Energy Exchange. Now, IEX has been in existence for over a decade and is a near monopoly with a 95% share in India's short-term power exchange market. The business in itself is not as complicated as it sounds, and as the word exchange might suggest, IEX is a power trading marketplace for electricity corporations and boards to trade in energy contracts. In simple words, just like how individuals trade in the stock market to make some profit, similarly, electricity corporations can trade on the IEX platform to increase their profitability and to have better price discovery. So say for example, there is a shortage of power in Hyderabad, which means since demand will be higher than supply, there will be an increase in the price of electricity there that will consequently eat into the electricity board's profits. In response, what the Hyderabad Electricity Board can do is to log on to the IEX platform and find out if there is another electricity board or transmission company that can offer electricity at a lower price. This utility acts as a supremely useful enabler for the producers and consumers of electricity and allows for strong price discovery to happen, which is something that was missing in the aggregation platform examples that we saw earlier. In effect, IEX acts like a toll bridge and collects a small fee for its services. And while I use the word small, this fee as of today is over 200 crores in profits and free cash flow, in spite of the Indian power exchange market being only 4% of the power produced. This number is as high as 30% in developed economies, and there is enough evidence of the power exchange market growing in India as energy generation becomes a lot more decentralized, a lot more privatized, and of course, a lot more greener. The point I want to stress here, at least in the context of this video, is that IEX is a technology platform which allows it to add more products in its portfolio without having to make a lot of upfront investment. For instance, IEX has recently added a product called Real-Time Market that enables consumers to buy power just an hour before delivery. Similarly, IEX has built other products like renewable energy and energy saving certificates on top of its existing technology, which also includes the launch of the Indian Gas Exchange, or IGX, by the company. Now, related to this point of expanding the product base with existing technology, a little earlier in the video, I spoke about CDSL and my reservations of it being a platform in its truest sense. You see, in my opinion, CDSL is very close to an IEX in terms of its functionality. And in this case, CDSL is converting an inefficient physical record-keeping system into a digital or dematerialized one. So just like IEX, CDSL has expanded its portfolio into shares, insurance policies, CKYC, e-warehouse receipts, and maybe they'll allow you to store your education certificates and so on. But what is CDSL missing? Well, if you go back to the classical platform framework, it becomes evident that there is no circular movement between the producers and consumers, and what the CDSL business seems to be doing is more of a linear pipe. Also, when I look more into the framework, I see that there is no information being shared here, like reviews, price discovery, or any such enabling feature. So again, in my opinion, while CDSL is in the intermediation business and it makes good money out of it, I really think it's simply a technology-enabled business and it does not qualify as a platform business. The final platform I'd like to present today is IndiaMart. So IndiaMart is in the B2B space and is India's largest B2B marketplace that brings together buyers and suppliers in over 97,000 categories. While most of us think of IndiaMart as a listings platform, If we look deeper into the business, we can now see a number of services that the company offers to its buyers and suppliers, thereby becoming a more active participant within the ecosystem and a true mobilization platform. This essentiality around the platform allows IndiaMart to operate under the flywheel effect with 14 crore registered buyers and about 70 lakh suppliers within their fold. So that's the platform per se, but if we have learned something over the years, it is that excellent platforms are not stuck to what they started off with, and they always look to expand their growth runways. Now, sitting today, we don't know what the IndiaMart business will morph into or whether they will transform in the first place. But given the fact that they are in this B2B SME space, we can certainly guess some of the growth runways that are available to this business. For instance, tomorrow's IndiaMart can be looking at building a custom payment solution for all parties, getting into financing in a massive way, setting up supply chain infrastructure, offering shared services, and also getting into the manufacturing and distribution of some fast-moving industrial goods. Our point is that when one evaluates platforms, the presence of bigger growth runways is something investors should always look for, in addition to the management's competence in exploiting those opportunities. So we discussed 5 distinct platforms in this video, and you would have realized the fact that not all platforms are created equal. Some come with strong network effects, some build ecosystems, some others operate in a regulatory environment and thrive, and some platforms give investors a high margin of safety with long growth runways that they can participate in. Now, we have not done any valuation here, and that was not the point of this video, but what we wanted to emphasize here is from where each of these platforms actually attain their value. In essence, investors should realize that the narratives are very important, and rather than simply buying into a platform business at any valuation, an investor should spend time understanding the market structure of each business individually. And with this, we come to the end of this video. I sincerely hope you like this video and will take many learnings from the same. Please do like this video, subscribe to our channel, and I look forward to catching up with you next week on another insightful video. Until then.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.